Hello and welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. I'm joined by Jim Mintern, CEO of CRH, a global leader in materials and water infrastructure, ahead of the company's Investor Day. Jim, thanks for taking a minute to talk to us.
Good to be here, Frank.
All right, why don't we just start off with your general outlook on the business? You're going to release financial targets tomorrow, but just your outlook on the business. How bullish are you on this business? I don't want to imagine you're bearish in any way. How bullish are you on the business right now?
Yeah, when you look at our business, Frank, we're the number one infrastructure play in the US. So if you take infrastructure, if you think roads, take water and take reindustrialization, right? That's where we played. So it's kind of three big mega trends. The outlook is very good, right? We're still in the early stages of the current infrastructure build. There's only about 40% of it deployed. So, we're still in a ramp up phase looking into 26 and beyond. Infrastructure funding is good. And then you look at the whole kind of onshoring, reshoring into the reindustrialization space. Yeah, the outlook is good.
And just to be clear, you're talking about 40% of the capital or money has been deployed when you're talking about the bipartisan infrastructure bill passed during the Biden administration.
Correct. Yeah, absolutely. Frank.
So obviously that in your mind, there's a lot more money to be spent and maybe even more money than originally allocated because these projects, they require resurfacing. They require upgrades. They require updates, even past the point of the original funding.
Absolutely. Yeah, there's a long tail on this funding. So, it's we're fortunate we work in a space which, as you said, has got bipartisan support. And if you look at the funding that's come into infrastructure, it's a good start, I'd say, but really it's addressing probably decades of underinvestment in US infrastructure. And if we're going to have that kind of reindustrialization and the onshoring, you need the infrastructure to support that.
All right, onshoring is a big topic. I want to go to your bread and butter, though.
Sure.
Road materials. You say the US market is valued at about $145 billion. With 90% of your revenue coming from public sector customers.
Correct.
Does that mean the revenue is stable, or is there any question about it with some of the changes we've sseen in DC?
No, you're right. It's about 90%. So it is our most stable, most recurring. We actually internally talk about it almost like annuity-like. The thing, particularly up here in New York and the Northeast and into the Great Lakes, the nature, the severity of the winters just tears the roads up. So it's a repeatable resurfacing program. When you go down south, you're into a lot more new build roads. So it is a very strong, predictable revenue stream. So if I come to the 1st of January every year, the most predictable part of CRH from a revenue perspective is the roads revenue.
All right, you're also focused on water. So you picked the U.S. water ecosystem at about a $100 billion opportunity. You're largely focused on stormwater and water storage. Is there an opportunity to grow that business?
There is. Again, it is a high growth area. If you look at our water infrastructure business, about 85% of what we do in water infrastructure is actually in the road space, right? So, stormwater management on roads. So as the roads business grows, the water infrastructure is going to grow also. And given, right now the challenges with water, the US water infrastructure is not really fit for purpose. A lot of it is coming to end of life in terms of age. So there's very significant investment required, to really support, again, that reindustrialization that we talked about.
So you mentioned some very big economic themes. Number one is reshoring. I think another one that could impact your business is the Trump tax and spending bill, specifically the idea that it's going to increase CapEx spending and also the idea of bonus depreciation. How do you play a part in that?
Yeah, that certainly helps us too, right, from our perspective, right? We're a business that grows, we do a lot of M&A on an annual basis, right? So from that perspective, the acceleration on the tax side will be helpful for us too.
All right. Have you started to see any signs of that? We keep hearing from different people that this is going to spark a new wave of CapEx spending, the bonus depreciation. Companies are going to spend more in equipment and start new projects. Are you seeing any concrete, no pun intended here, any concrete signs of that?
Yeah, I think, as we got into the second half of this year, as we got a bit more certainty around that, we're beginning to see it, right? Particularly kind of in that reindustrialization, non-res space. It's bringing a bit of certainty so investors can see that. So yeah, early signs of it. And as I said, the outlook in the 26 and beyond is good.
I would imagine greenfield development, that's the best for your business when somebody's going to build something from scratch. The tariff and trade policies, have that impacted the desire and the willingness of companies to make those kind of greenfield investments?
It has, absolutely. I think, we see it in terms of the, bringing that kind of critical industrial infrastructure back into the US, there's no doubt that certainly has helped it, and it plays right into our sweet spot, as you say, because we're often, if you think about these reindustrialization projects, we're often the very first people on site, Frank, right? So you think about the water, the communications, the energy infrastructure that goes into those sites, that's us, that's what we do, and then we bring in our aggregates, concrete, etc. So, they're very important and a huge part of our business.
So have the tariffs, has it been a push and pull? Have the tariffs slowed it down? But the idea of reshoring from the administration, has that helped, or have they both helped with the idea that companies want to try to avoid the tariffs as much as they can?
It has helped. I think it's overall it's kind of a net plus, and I think it is it's a very, when you look out for the kind of medium to long term, it's very positive for the U.S. economy.
So right now, I think most investors are expecting at least 2 more rate cuts this year, especially if you look at the Federal Reserve Summary of Economic Projections. What could that potentially mean for your business? The idea of at least 2 more rate cuts and maybe even more cuts coming up next year.
Yeah, where it's going to impact us most, Frank, is clearly on the residential exposure and the new build res. U.S. residential is probably going to be about 1.3 million homes this year. That's low, right? We would be very bullish on U.S. residential in the medium to long term, but it's not a demand issue, it's an affordability issue. It's mainly 30-year fixed mortgages which are financing that, and they're a shade under 6.5%. We need some interest rate cuts. That needs to begin with a 5 to get that new build res going. And if that comes through, that would be certainly very helpful for our business too. I also think it'll help on a lot of the private non-res developers as well. So once we see that interest rate cycle begin to cut, it's going to be positive.
Is it about a cycle, or do 2 cuts kind of spark what you're talking about?
I think, good question, right? I think once you get a directional that it's beginning to trend down, that will get it going, right? But certainly, another 2 cuts will be very helpful. Yeah.
I want to talk to you about something in your Investor Day materials. You mentioned some of the businesses you've won as part of the AI build-out, and these are, of course, multi-year products. A large chip manufacturing plant in Boise, Ohio. You don't want to say the company, I understand. A large chip plant in Austin, Texas. Data center projects in Texas and Nebraska. I want to talk to you about that broadly. We see a lot of announcements. One big headline one has been the Stargate project, a $500 billion project with OpenAI, SoftBank, and Oracle. When we're looking at these projects, as granular as you can be, let's say that it's $1 billion worth of commitment. How much of that money goes to CRH?
Yeah, if you take Stargate, right? I mean, our biggest state biggest part of CRH in the US is Texas. It's our single biggest state, right? So, and if we operate across all 50 states, we've got 2,000 locations across the US here, right? We're touching most of these projects, right? From our perspective, and maybe what makes us different from a lot of our peers, we're not just delivering aggregates or concretes to a site. No, we're actually often the very first people on site. You think of the water coolant demand for data centers. You take of the energy and the communications. We supply a lot of that subterranean infrastructure that goes in, and then we bring in all our other materials, our aggregates, our concrete, asphalt and the paving as well in the actual facilities. So, we're different. We have a more holistic product offering to the construction of these big projects. And a lot of the big kind of civil contractors pull us from state to state because of the good experience they have. What they get from us is they get a broader product offering, they get quality, and they get surety of supply. And particularly on these projects, speed is essential. They want to build quickly, and they know they're going to get that from us. So yeah, we punch significantly above our weight in this space.
Talk me through the AI build-out. Again, let's say $1 billion being spent. I think what you kind of spelled out is that it's a lot more than just bringing the rocks to build a facility. Yes. And when you go in there, it's a lot more than just a bunch of data centers. You need water, you need ventilation, you need other things. Kind of just walk us through the CRH portion of all that.
Yeah, our portion of that is, okay, it's starting from the greenfield location, right? So you got to bring in the infrastructure first. So to get the water onto site, get the energy onto site, get the communications onto site. We're supplying it here. We see it here in a lot of the model beside us, the kind of infrastructure we do in that space. Then we're coming in terms of a lot of our cementitious in terms of stabilizing, hugely important for data centers, right? That you kind of really rock solid foundation. So a lot of the soil stabilization that goes in, then we bring our aggregates, then we bring our concrete, right? Then we bring our precast structures. So that's where we play.
There's also some ambitions by big tech companies to use nuclear energy to possibly power these data centers. Talk to me about that opportunity. And do you think just this entire build out, including nuclear energy, is that priced into your company?
Yeah, I would say nuclear, again, is an area where we have a lot of expertise, particularly bringing from our international business. We've worked on a number of nuclear facilities, particularly in some of the more recent projects in Europe. So again, they're a very heavy user of our particular products, Frank, right? So that's a very good business for us in terms of intensity, whether it's aggregates, concrete, et cetera. So that's a real opportunity for us. And, as we look out, it's very good for CRH.
Your stock outperforming the market this year, but in general, the materials sector is lagging. I don't want you to be the spokesman for the entire materials sector, but as you go to your investor day, it sounds like you're going to be talking to investors about the role that things like rocks, concrete, and water really plays in this tech revolution that a lot of people see coming.
Yeah, absolutely. When you look at the mega trends, you go back to it again. You think of roads, you think of water, and you think of the real industrialization space. That's where we're unique, right? And what's unique about us is that we have a connected portfolio. We don't just do the aggregates of the concrete. No, it's a kind of connected product offering. which, and when I think about it, when you look out for the next 3 to 5 years, what's going to be critical in our space is how you deploy capital, right? And that's where we're different. We have that optionality, and you look at it, if you look at our track record over the last 1, 5, or kind of 50 years even, we're really the true compounder of capital in the building material space.
So as we continue to see these announcements, it seems like every other week some tech company's making an announcement either way. How exciting is it for you and your company?
It's hugely exciting, right? And I think, again, what differentiates us is our more kind of holistic product offering, right? We're not just supplying one material. And I think it's about building those relationships with the companies, with the contractors, because as I said earlier, it's about quality and speed, Frank. That's what they want, and that's what they get with CRH.
All right. Again, you're going to put out your financial targets tomorrow. You're bullish on the business, it sounds like. Is there any part of this business do you think is kind of under the radar or undiscovered right now?
Yeah, I would say that the two parts of our business, and we're going to unpack that tomorrow on our Investor Day. I would say the quality of our roads business, right? The consistency, the reliability. It's very low capital intensity, so tremendous cash profile, which kind of knocks onto returns from that perspective. And also, I don't think, our water infrastructure. We're the number one in U.S. water infrastructure in the U.S. So we're going to have the opportunity tomorrow to unpack a bit of these in more detail.
All right, Jim Mintern, CEO of CRH, thank you for taking the time to explain just your view of the business going forward ahead of your Investor Day. Thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Have a great day.